So my thoughts at this point of time, I think that there may be inflation due to tariffs. If you look at the US inflation rate, you can see it is actually coming up, which is quite scary lah. And the tariffs, right? One thing is that Trump may continue to retaliate, and that's why everyone is a little bit worried. But our job here is to prepare ourselves, right, and position ourselves in terms of where interest rates are going to go, and then choosing what rates, whether fixed or floating, for mortgages.
Okay, all right. So let's start tonight's session. Once again, welcome to the Invest with Pete live stream. Right, this is where is a public live stream. I open it up to the public, not just those who are in the stock market genius community, because last week, like I said, many things happened. Three major events, and tonight, right? If you look at the futures right now, US futures is down 1.7%. Okay, right. What else is down? Bitcoin is also down by 3%. Right. So tonight we're definitely going to see a very red market right now. Okay. But the thing is, how do you prepare yourself from here? Okay. And what are the opportunity sets from this situation? Because the important thing is this, guys, we are all investors, right? We are all investors. The number one thing as investors is take that emotion out of you and think about every crisis, every situation that is happening, right, as an opportunity. And the question you need to ask yourself as an investor is, hey, how can I benefit from this? What can I do? Okay. All right. So to begin, let me just ask you guys a very quick question. There are many things that happen over the weekend. Let me bring up the slides over here, then we can all have a look. Okay. All right. There are many things that happen. Which one stands out the most to you? Okay. All right. So go in the chat right now, right? Okay. So there are more than 200 of you. I want to see 200 replies. Okay. Okay. Out of these three, the interest rate pause, Trump tariffs, the AI crash, which one stood out the most to you? Okay. Type in the chat, right? You can type number, you can type in the word. The word is easier. The word is easier. Okay. All right. Let me also say hi to those of you who are here. Okay. Ian is here. Hello. Kelvin. Yes. Hi, Alan. Geraldine. All right. Wei Jian. Hello. Jessica. Brenda. Hello, Brenda. Kester. Michael. Hey, Brenda, I realized, right, you have 2 subscriptions to my Stock Market Genius. later maybe I email you to tell you more about it. I love that you guys support me in the Stock Market Genius community, right? But guys, don't have to subscribe twice, okay? I'm very grateful if you want to support me, but don't have to subscribe twice. Save the money, go and invest some more, okay? All right, Niva is here as well. Hi, Niva. Mark, Ching Ching, okay? All right, okay, so I see a lot of 2, mostly 1 and 2, I would say. All right. Okay. Jin Ting is here as well. Hello, Andy, Steven. Right. So a lot of 1 and 2. Andy went for 1, 2, 3. everything happened together. Okay. So tonight, this is what we're gonna do. Regardless of what you have chosen, okay, I'm gonna go through all 3 of them. All right. And I want to start with interest rate first, because to be very frank, let's just put it out there first. To me, the tariff and the AI crash, if anything, is short term. But interest rate is perhaps one of the most important things because it is longer term impact. Okay. All right. So let me go to the first part before I begin, right? Let me just do a very quick disclaimer. Everything here is for information and even entertainment purpose, right? If you like the entertainment that I'm putting up, okay? Right? Please seek your own investment advice. The important thing here is that I want all of you to learn how to be an investor. Okay? Learn how to be an investor and not be how to say and not be a investor that just copying trades. Okay, let's be very clear about this. Okay, all right. Now talking about interest rate, very importantly, right now we are looking at, hey, is the Federal Reserve and Trump going to be against each other, or they're going to work together, right? Now interest rate don't just impact stock market; it also impacts the property scene as well. Okay, now I must confess, I'm not the expert in interest rate by any means. Okay, but let me just try to give you all some flavor of what's going to happen, right? Before I bring on our resident interest rate expert, Ethan, to share with you guys even more. Okay, so what about interest rate that's happening right now, right? Number one, the Federal Reserve suddenly sort of like paused the rate cut for a while, right? In fact, they were predicted to cut about 3 times this year. But right now, with this pause, there's some changes to that, perhaps. Okay, now guys, what do you think is gonna be the interest rate cut? Is it 1, 2, or 3, or even 4? Type in your number. How many rate cuts do you think we will see this year in 2025? Now that they have paused once already. Okay, by the way, in one whole year, we have 11 FOMC meeting. So quite a lot of meeting, quite a lot of meeting. All right. They can actually still cut 11 times if they cut every single one time. Okay. All right. So I see a lot of tools. Right. Some people at 0. Wow, Derek is very, very, very pessimistic. 0, not gonna drop, right? Okay, some people type 3, some people type 4. Okay, so the thing is this, I want to be very honest. My answer is I don't know. Okay. Right. Later on, we're gonna ask Ethan now. We see what is Ethan's number, because Ethan's number is likely gonna be more accurate. Now, right now, as of now, if you go to the CME Fed Watch, right, this website, you can go to you just type in CME Fed Watch. It is predicting an 83% probability that they're going to not cut again in the next FOMC that is for March 19. Okay, so just take note, there's no FOMC in February. The next one is going to happen in March. Right, and right now they're saying there's 83% chance. It's as good as saying close to 100%. Right, will this happen? We are not quite sure. Okay, because before that, the CME Watch did say that this time round will cut, and it was wrong. Okay, now one important thing is how many rate cuts did the Federal Reserve themselves said earlier on, right, that they will cut. So if you look at this over here, the federal funds rate, right, the one at the bottom here, right, in 2024, okay, so if you read down all the way, 2024, they said that it was 4.4%, right, 4.4, and then in 2025, they say that they're going to be at 3.9. So this means, this is how many cut? Everybody, type in the chat. A 0.5% is how many cut? It's a 2 rate cuts, right? Because each time when they cut, the minimum or the standard rate that they cut is usually 0.25. Right? So right now, based on the Federal Reserve, before the next time they come up with their own projection again, it seems to be 2 times. It seems to be 2 times. Now, this is dramatically lesser than what we expected previously. Right? So what we see here, it seems to be the case of like, it's going to be higher for longer. Right? This is a very common phrase that a lot of people have been talking about. Okay. Now, with that said, right, how is this going to impact the property market? How is this going to impact the stock market? Okay. Now, let me bring on our resident interest rate expert, Ethan, first to talk about, right, to give you all a flavor on what he thinks, right, is going to happen to the interest rate going forward. Because in the last round, right, I don't know whether you all remember, Ethan was here with me, okay, and we said that, hey, let's see who is going to be correct. And this time round, I must say, he was absolutely spot on. he was absolutely spot on. I was the one who saying, yeah, they will sure cut one, they will sure cut the rate one. But in the end, right, they didn't cut the rate. Okay, so everybody put your hands together, right? Type in CCC and welcome Ethan to the live stream. Okay.
Hello everybody, 恭喜發財啊！
Wow, you still got
Oh,
orange. I don't have orange.
Yeah.
But I have an orange Charmander. Okay.
Wow, better. Yeah, I think there's a lot of interesting things that happen this time, and the correct answer is I don't know where interest rates are going to go, maybe even fall. It depends on how things are going to go. At this point of time, I see inflation creeping back up, which is part of the worry. But we've got to see what happens in the broad market before they will then react lah. And the standard line that Jerome Powell always like to do is look at the totality of incoming data. And
that's what he always says. Okay.
Always say standard answer. So that said, right, I think it's best for me to be able to go into our economic update to let everybody know what is going on in the market so far. Okay. So but before that, let me introduce myself.
Oh yeah, yes, please introduce to the audience. I think some of them are new to you as well. Yeah.
Hi everybody, I'm Ethan. I am from Unbeatable Mortgage. We specialize in bank mortgages in Singapore, which is why we look at interest rates with a very, very keen eye. Coming to us, we'll be able to get you the best rates over 10 banks, and we've got our proven framework to be able to help you get every bang for your buck lah. So we do everything we can to be able to help our clients save money, including what you are seeing today, which is to be able to predict where interest rates are going. And we have a framework over here. The strategy is there's property strategy where we need to know what you want to do, the structure, how we're going to do it, and then the rates, which one we're gonna pick. So today we'll be focusing on what rates to pick lah. Okay, and why FOMC is important to us, right? Is because our government gives up control over domestic interest rates, and we typically follow US interest rates. This is the last 19 years of data, and as you can see, we are usually below the US interest rate. The red color one is Singapore, okay? So that's it. The same thing that what Pete says. This is not financial advice. This is for entertainment. We are not fortune tellers. We are hardworking. As you can see, this is a result of 5,000, nearly 5,000 lines of data. So it will come in later lah. So today, the more important three things, right, in terms of interest rates, number one, what Jerome Powell is doing, which is to hold the rates at 4.33%. And what MAS is doing, if you got a car, it's always on the radio telling you, hey, the S dollar NER is being held at this rate. I'm gonna talk a little bit about what's going on and Trump's tariffs. So monetary policy, this is from the US monetary policy. They say they maintain the target range, which is quite in line with what they want to do in this term lah, which is to only lower by 2 times. I don't know when the decrease may happen, but according to them, they still want to decrease 2 times. I'm not sure where it will be until the March FOMC, then we get a clearer picture. But for now, right, we also want to look at the Singapore monetary policy, because this is the first time, right, that MAS will therefore slightly reduce the slope of the S dollar NER, which means that there is a small effect that SORA rates are going to go down. Okay. Next one, and you can see, right, in Singapore savings bond, right, there is a higher demand for money right now. The interest rates have actually increased from 2.86 in December to now at 2.97. And the beautiful thing is that mortgage rates are actually lower than this, which is why I love mortgage, yeah. Right. So last thing is what Trump is actually saying. At this point of time, Trump's tariffs is going to be at Canada for 25%, Mexico at 25%, and China at 10%. And as you can see, there is a fear of global trade war, which is why you can see today's markets react quite violently lah. That said, right, this is the current projection where we are looking forward. We are able to see that they are still, at this point of time, the current data is that they are going to drop by 2 times. And then in 2025 to 2026, they are going to drop another 2 more times. So it really depends on where inflation is, because their job is to balance inflation and unemployment, right? So my thoughts at this point of time, I think that there may be inflation due to tariffs. At this point of time, if you look at the US inflation rate, you can see it is actually coming up, which is quite scary lah. And at this point of time, I think that the tariffs, right, one thing is that Trump may continue to retaliate, and that's why everyone is a little bit worried. But our job here is to prepare ourselves, right, in terms of and position ourselves in terms of where interest rates are going to go, and then choosing what rates, whether fixed or floating, for mortgages lah. So that's it. I will hand over my time back to Pete to go a little bit more in depth about what you think about the tariffs.
Yeah. Okay. So guys, for those of you who are in having a mortgage right now, right, or those of you who have not had a mortgage, right, I don't know what are your thoughts, but maybe let me just ask Ethan right now, right. It is very strange that we are even seeing like the Singapore savings bond interest rate going up, right? On the ground, you deal with mortgages every single day for our community members, and you talk to the banks, right? Any sentiment from the banks about how they feel about interest rate, going forward? Any changes on like the mortgage package that people should know?
Okay, at this point of time, I think that the competition of pushing rates down is not as prevalent as what we saw the last 3 months. I think rates are more or less being held steady. Maybe they drop a little bit, fight a little bit here and there, but not more than 0.05% movements. I think it is quite unanimous that we know that interest rates are going to be held higher for longer.
Yeah.
And I think that at this point of time, the fixed rates are looking damn delicious.
Okay. Later we go into the actual rate that you see from the bank. But guys, for all of you out there, right, how many of you all are currently looking to, get a mortgage loan, or in fact you're looking at refinancing your mortgage? Can you type in me in the chat, right? So the important thing right now, previously, when I saw people not making a move in their property plans, right? For example, not refinancing, not taking a property loan yet, right? Is because they think that, hey, the rates might fall down very, very quickly, right? But right now, it seems to be not so much already, right? We will probably see like at most another 0.5% drop in this year, right? So maybe Ethan, can you show, right, currently what are the mortgage rates that you're seeing in from the banks? I know that you cannot state specific banks. Okay, so guys, just to let y'all know, right, Ethan cannot say, oh, this bank is the best, that bank is the best. But when you go to him, right, he will be able to find out the broader all the banks rates for you. Okay, but right now, what over here is he can share the broader rates with us. Okay.
All right. So talking about the rates today, right? Of course, right, when you have a larger loan, they will give you better rates. And at this point of time, at 300,000, you can get about 2.65%, which is one of the most basic rates, and it is already cheaper than the Singapore savings bond rate. So a lot of my
Yeah.
clients, right, what they do is they gear up, which is to take out money on top of their current loan
Yeah.
to put into Singapore savings bond. But once again, not financial advice. They arbitrage between the two. They make money.
Yeah. So if you want to do the gearing up thing, which I did before during the COVID crisis, so what I did was that I gear up to take the funds and invest in the stock market. But it is something that you need to really know the risk. So for those of you who want to gear up for some investment reason, do get in touch with Ethan. He can share with you what are the gearing up process. Okay. But I would say in general, if the rate is this low at 2+%, then I feel okay to gear up. Previously when it was 4, I wasn't so comfortable. Yeah.
Yeah. So I think at this point in time, it is quite a big spread lah. When you're looking at people who have mortgages above $1 million, and when you gear up, it actually pushes you up to a higher tranche, so you get cheaper. So that's why some of my clients like to do it. At this
Yeah.
point of time, you're looking at SORA. When you're looking at SORA currently, the 3-month SORA is 2.9%. 2.9 plus 0.6, 2.9 plus 0.6 for 500K. And for $1 million, it's 2.9 plus 0.5, which is about 3.4 lah. At this point of time, 3.4 or 4.4, this one, it really depends. And what we do is that we actually go into the calculations, which I will share later lah. Okay. So at this point of time, this is the fixed rate and the floating rate, but building under construction, they actually get something a little bit lower. So for building under construction rates, you can look at 1 month or 3 months SORA, which is quite important because everybody, I wanna quiz you guys a little bit, yeah. If interest rates are falling, okay, albeit slower, which rates would you think is better? Do you want to go to the 1 month SORA with the 1 month average, or the 3 month SORA with the 3 months average, which is 90 days versus 30 days? Okay.
Yep.
So for those that say 1 month, put 1 month. Those that want to go for 3 months, put 3 months. All right. Okay.
Take note, the premise is that the interest rate is falling. Okay. However slowly it may be.
I see a lot of 1 month. I see a lot of 1 month.
Quite a few 3 months as well. Yeah.
Some 3 months, some 3 months. It's okay. We're all here to learn. In the
We're all here to
classroom,
learn.
the mistakes are free. In real life, oh, you're very expensive.
This decision can easily save you 5 digit.
My job is to help as many people save $10,000 as possible. Yeah. Okay, 1 month. Excellent, excellent. So the correct answer is 1 month, because when you have an average of 30 days, right, when the interest rate drop, right, you'll be able to experience the lower interest rates faster. Albeit it's a little bit more volatile, but I think if you no choice, you are in the building under construction gang, those people that just got a property that's
Yep.
about to be built, then you have no choice but to take floating rates. And then you'll be able to choose the 1 month over the 3 months. And certain banks have it only. Not every single bank have.
Mm.
So that's for the rates right now lah.
Hey, Ethan, I got a curious question. You know, we have
Mm.
the traditional Singapore banks, right? The main few, and
Ah,
the overseas banks, right? So the
mm.
different other non-Singapore banks, right? Generally, right? Is there a group that provides slightly better rates
Slightly better actually.
or better terms? I don't know.
Ah, so some terms like waiver due to sale is very important to people who have like their intention to sell. So if I get you the slightly cheaper rates, but then if you want to sell it, you gonna the penalty of 1.5%. Super not worth it.
Mm.
So there are banks that always give the waiver due to sale. There are banks that give free repricing, so on and so forth. But this depends on the strategy lah.
Mm.
And to your question, is there a specific bank to go that always give the lowest? No. In my 5 years experience, every one of my banks got the lowest spot before. So when people come to me,
They're always
instead
trying to
of
one up each other, right?
yeah, they usually try to one up each other, and then sometimes those banks that don't have a lot of loans, then after that got too much cash, then time to lend out more money. Otherwise, the money is sitting there for nothing.
Yep.
So this is when they get a bit more competitive, and the advantage that we
Mm.
bring for you guys, right, is that these are the unbeatable rates that are published on my website. Then my bankers will look at them whenever there is something that is better. They update me, I will update the rates there.
Okay. So guys, for those of you, right, who have been looking at changing your rates, I know just now someone asking how to contact Ethan. Okay, so let me just bring up Ethan's contact here, right? So Ethan has been doing this for our community for the longest time, right? I don't know when he will stop doing this, because from what I know, you recently started charging for consultation for mortgage. Okay.
Yes.
But really thank you for still keeping this for our community, right? Okay, so guys, for those of you who are here right now, only for the Invest with Pete community. Okay, this is the link over here, rebrand.ly/unbeatable loans. I'm just going to type it in the chat as well. Okay, and the QR codes. Yeah. So in the form, just type it in and let Ethan know exactly what are your situation, right? So for example, this is the form. Okay,
Mm,
right? You can key in your email, name, contact number, and which type of loan you are going for. This is important because different type of loan requires different type of mortgage strategy. Okay, so do
correct.
let Ethan know, or if there's anything that's quite special that you can put in others.
Correct.
All right.
So my team and I will be able to reach out to you.
Mm.
So my team consists of very, very strong characters that you guys will hopefully get to meet. So yeah.
Yeah. So if you, and for example, for those of you who are okay, not slightly older, you're more
Mm,
experienced, okay, but you need some creative financing solution, right? Okay, do let Ethan know. One thing I really appreciate about Ethan, right, is that he's not just the standard bank banker who just say, oh, this is how much you can borrow, then that's it, right? If you have any plans, like say, oh, I want to buy a slightly bigger place, I want to buy a slightly smaller place, or whatever other strategy you may have, do let him know, and he will come up with creative solutions for you, right? So he did that for one of my community member. I'm not confident to name names, but it involves like a four-step process. A decoupling first, then the husband go for gearing up because the wife don't have income. Then later on, the wife can actually take to buy property. Then in the end, right, from a couple that is like 40 plus year old and 60-year-old stuck to one property, they manage to, and some of the wife has no income, they manage to decouple it and buy two property, right? So that's one important thing, right? Okay, so if you need creative solution, do let Ethan know. Okay, guys, if you have
yeah.
any questions about interest rate or mortgage, do type in the chat. Okay, I got a few
Mm.
more questions, Ethan. Going forward, right? How do you see this interest rate impacting the property prices?
I think interest rates will slightly affect the property price because right now it is one of the cheaper during over this 2-3 years period lah. And I think because of that, a lot of people will then take action because of this. I think also interest rates are the stress test rates for property, right, actually dropped from 4.75 to 4%.
Yeah.
And my team and I will be able to help you get a much higher loan because not every single bank drop. There are certain banks that haven't dropped yet, and because of that, we are able to get higher than normal approvals for most of our clients.
Yeah. Okay. So guys, the important thing is Ethan is able to reach out to all the banks. So make sure that you have someone to go through all the banks, right, to find out all their rates, right, before you decide. One thing I realized some of the members in the past, what they used to do is because they only work with one bank, right? So they just go to that bank, right? For example, if they work with, okay, I cannot say example. For example, they work with the bank that's red color, okay? They'll just go back to the bank and say, hey, I want to refinance my mortgage. And they never thought of like, hey, actually, like what Ethan said, right? Nobody actually is the lowest all the time. Right? None of the banks are always the cheapest. So you can actually shop around and find out. Generally, if you take $1 million loan, every about 0.5% difference on a monthly mortgage, right, can easily be close to 1,000 difference, right? Yeah, right? Okay, so guys, now the thing about interest rate and mortgage, I want to show you all something very interesting. Is that right now, okay, guys, you all make a guess, right? Singapore savings bond just now, I think Ethan already mentioned. I think also mentioned about the SORA rate at the mortgage rate about 2.6, right? Something like that, right? 2.6%.
Mortgage rates right now $1 million is 2.44.
2.44. Okay. So guys,
fresh off the oven today, just come out only.
2.44. Okay. So everybody, this is the Singapore T-bills for 6 months. Okay. Can you make a guess? Okay, don't go and search, just make a guess. What is the annualized return for this T-bill? That means even though it's 6 months, but if you analyze it, right, what is the return for you to hold it? If you put in $100, how many percent do you get back? Okay. Right? So type in the chat. Okay. Well, Clara, very specific. 3.04. That means she know the exact answer. She bought it probably. Okay. Right. So yeah, it's true, So if you scroll down, right, can you have a look? Okay, let's have a look. Okay. 3.04%. Can you see this? I make it bigger. 3.04%. Okay. So, so Clara bought the T-bills, right? So this is exactly what Ethan was saying just now, is that some of the investors who are a bit more savvy, right? They say, hey, I do gear up, right? I take the money, right? I just go and buy the T-bills. I arbitrage the 0.6%. You can do it. You can do it. Okay. Okay, but guys, to me, the most important thing, right, is not to just arbitrage the T-bill, okay? Is that going forward, right? With the interest rate gonna stay higher for longer, is it better or worse for investment? Okay. Now, let me ask you all. Let's start with property first. Okay, guys, do you think that this is going to be better or worse for investment? The fact that interest rate is going to stay higher for longer. Is it better or worse? Type in the chat. What do you think? Okay. What do you think? Higher for longer. Better or worse? Right? So yeah, I expect a lot of worse, right? Okay. Anybody think it's better or not? Anybody think that it is better? Anybody think that it is better? Nobody. Everybody thinks it's worse. Okay, so I'm going to give you a view that is contrary to worse. And I want you all to think about it, right? And see if it makes sense to you. If it makes sense to you, you know what I'm saying, then good. If it doesn't make sense to you, it's okay. Maybe you can go back and watch again. Because other than stock market, I also help my clients, right, to look at property. I share them what are the different strategy, how they can, and of course I work with Ethan. I'll tell them go to Ethan for mortgage, but I always help them to strategize. Now, the important thing is this. Previously, right, a lot of people were not willing to go into property. Why? Because they keep thinking that, hey, Pete, if I buy now, right, my mortgage, I take a loan now, right? Like Ethan said, I take a loan, maybe it's a fixed loan. Then later on, the interest rate drop. Wow, then I lose out, right? That's not very great, right? Then my mortgage could have been cheaper, but because I lock in for 2 years. Or there's one group of people who say, hey, Pete, I wanted to buy a house, but I don't want to go in to buy it because I think the interest rate is going to come down some more. So they delay that process of buying a place. But right now, what do I see when I work with a lot of my clients, right, is that those who are in the market waiting, right, now they have better clarity. Because they say, hey, Pete, doesn't matter. Even if I take action 1 year later, right, the interest rate is not going to change that much. 1 year later, right? But for property prices, it seems like nothing can stop property price. It just keep on increasing, maybe like 3%, 4%, steadily, slowly at a yearly basis. So the question is, hey, if I know that roughly property is going to increase another, let's say I be very conservative, 3% to 4%, right? If you're buying a $2 million property, hey, you know what is 3%, 4% of 2 million? Let's say we take 3%, it is 60K more. So the question is, do you want to pay 60K more? Probably not, right? So now with more clarity, what I personally experience for what I talk to my clients, right, is that number one, those who wanted to refinance and say, let's just refinance already because it's not going to get any cheaper already. Okay. Number two, those who have been waiting to buy, right, they say, let's not wait any further. The rate is not going to drop anymore. Plus, one more thing is that one thing that a lot of people always remove from the mind, right, is that the interest rate might even go up, The interest rate might even go up. Now, at this point, right, of course, there'll be people who say, hey, Pete, but if interest rate go up, property prices will drop, right? But guys, it has clearly not happened after COVID, right? Interest rate raised from almost 0% all the way to 5%, and property price in Singapore has not come down, at least in Singapore. Okay. And US property prices has been also rising. So I want you all to go in with a clarity of mind to stop this synchronizing, thinking that, oh, the property price will drop if the interest rate is higher. It is absolutely not true. That correlation actually is not as strong as what you think. Property prices rely on a lot of factors, right? Including, spending power, income, whether you want to buy or not, So there are a lot of things. But one thing for sure is that if you delay further, the price go up by another 3% in 60K. Okay, so I'm not here to peddle to everybody who say, hey, buy property, buy property. But I'm just saying, if you are going to buy, think very carefully. Is delaying in your best interest? Right? That's all I'm saying. Okay. Now, for those of you who need mortgage help, then of course do approach Ethan. Right? Now, how does it affect the stock market? Now, this is a little bit more complicated than property. So that's why generally, right, to be very frank, I like the combination of property and stock market. Because to be very frank, property is a very simple investment. Right? It's a very simple investment. You just buy a good place, buy a good size unit, right? Good location, and that's it. Just leave it to run. Whereas property requires a lot more monitoring. Okay. So before I go into the stock market part of the picture, all right, I just show this again for those of you who want Ethan's help. Okay. Right. The link is over here. Let me send to everybody. Okay. So it's rebrand.ly.
Correct.
Okay.
So my team
right.
and I will be able to reach out to you. So
Yeah.
because there's a lot of you and I am just one human,
Yeah.
so I have built a very incredible team. Both of these two alpha people honestly they are retired already. They are done already. I think you know both of them, but they still want to help people save money through their property loans, through helping you make your cash flow a lot better by optimizing your mortgage.
Yep.
So these
Okay.
are incredible people, Shem and Jason. You guys will be able to experience their service lah. And honestly, when I look at the feedback that I'm getting, a lot of people are very impressed by both of them. One of
Yep.
them is a retired CFO. The other one have a lot of property. Like my fingers cannot even count. So, yeah, these are really really
Yeah.
incredible people. I am super blessed for them to be able to
Yeah.
partake in Unbeatable Mortgage.
Yeah. And that's how Unbeatable Mortgage as a team, right? Ethan and his team, right, is able to reach out to all the banks for you guys. Okay. So once again, I know Ethan is charging, but Ethan, thanks for sharing with my community and also extending this offer to them. Right? So those of you who want a complimentary free mortgage consultation, do fill in the form here. All right. And Ethan's team will get in touch with you. Okay. All right. So guys, any more questions about interest rate or anything, right? We can continue the conversation later on. And in fact, you can reach out to Ethan as well. Okay. All right. So everybody, can we put our hands to thank Ethan for coming on to the live stream, right? To share his views on interest rate as well. Type in CCC. Okay. All right. Fantastic. Okay. So the next thing after interest rate, let me just go into the next thing. Okay. That is on a lot of people's mind. Okay. Hey, what is on a lot of your mind? What is on a lot of your mind? It's just now number two, right? Number two starts with T. Okay, and that is the tariff, right? Okay, so the first question, right, I want to ask everybody is this. We know about the tariff actually over the weekend, right? It was on the 1st February they started it. Now, right now you can see the market. So Carol is saying can take loan now and use it to buy stocks. Hey, actually, that's what I did during COVID. Okay, so I'm not recommending you all to do it, but I'm just sharing with you all very openly what I did. So yes, okay, that's a bit of sidetrack. So what I did was okay. Let me come back first. Okay, so what I did was I reverse mortgaged my house, which I already paid off quite a fair bit already. And then of course through returns help lah. Reverse mortgage my house. I take out the funds. I invest into the US market during the COVID crash. To be very honest, I didn't even buy in at the lowest point. Right. So those of you who are in the stock market genius, I always say, right, the quick tip is this. When Pete buys something, right, don't buy immediately. Wait for a while. because every time after I buy something, right, it will drop some more. Okay. Right. And I bought it at not at the lowest point, but once the prices recover, right, in that 6 months, right, I repay back the loan. So that's what I did. Okay. I'm just sharing with you all my strategy, but please, this is not investment advice. Don't do this if you don't know what I'm saying. Okay. Please do your own due diligence. All right. Now, let me come back here. Okay. So everybody, can you type in the chat, right? What do you think? Does tariff cause inflation? Because right now, right, the market is nuking. Okay. Right. I show you here. This is the US market. Pre-open, right? Already boom. Right. US market dropped 1.5% already. Okay. Right. Now, guys, can I ask you, what's the fear here? The fear here is that because people thought that, wow, if the tariff is going to come in, it's going to cause inflation. And what's going to happen when cause inflation? Boom. Jerome Powell will say, let's increase interest rate. Then we go back to the high interest rate again, right? Then everybody is damn fearful for the market. Even though, to be very frank, during high interest rate, did the market go up or down? Think about it. Don't have to type in the chat. Just think about it. During the high interest rate environment, did the market go up or down? I'm just going to show you the answer here. Right? So be very clear about correlation. What you think may not be the truth. Right? So over here, the important thing is this. I always show this to all. Last time when I was in the military, when my staffers come to me, right, I always tell them this. This statement was taught to me by my ex-boss. Right? She says, "In God we trust, but all others bring data." Right? Because your opinion, your views might be an experience. That means you felt it somehow from some other situation. But on the ground, is this the reality? For example, when interest rate goes up, does it mean that property prices come down? Does it mean that the stock market price come down? You can have a look here, right? It is not. Right? So that is one important data point that you must already understand. Okay? So I also wanted to find out, okay, can I find the data that shows me, right, whether tariff in the past has truly caused inflation in the past, right? So what I did was I used the best method I can think of right now, which is instead of ChatGPT, I went to DeepSeek, okay? And I asked DeepSeek. So this was the reply that DeepSeek gave to me. All right. So I asked DeepSeek, can you give me all the past example when US increased the tariff? And I want to know, did it actually cause inflation? Okay. So for example, actually Donald Trump has done this before. Do you remember? You remember this is not his first rodeo as a president. This is his second time already. Okay. So he's very experienced. He has done it before. Previously, he imposed it on Chinese imports like steel, electronics, and digital. Right? So what happened was they realized, hey, the New York Fed themselves realized that actually it only increased the Chinese good price by 1.2%. Now, guys, is 1.2% really like inflation? It could just be the data wiggling, right? And they say that the overall inflation rate, which is CPI, remain moderate around 2 to 3% annually. Okay? Right? So it has been done before, but it did not cause widespread inflation. Okay, that's data point number one. Then he showed me another one, which is the 1930 one. I didn't even know there was a tariff in 1930, which is as a very interesting thing called Smoke and Hawley Tariff Act. So they raised tariff over 20,000 import goods. This is economy-wide, every damn thing they can think of, right? In 1930s, they did it. And guess what happened? Actually, like what Ethan just now said earlier on, due to the retaliation, right? Global trade collapsed by 66%. So in the end, they did not see inflation. They saw the opposite. They saw deflation, right? But actually, is this a good thing? Not really, lah. To be very honest, if you ask me, right, as an investor, as a ex-economist type, if there's inflation and deflation, guys, which one do you prefer? Can you type in the chat? Do you prefer I or D? As an investor, as an investor. Of course, if you are like my mom who will buy things from the grocery, you prefer deflation, okay? But as investor, do you prefer inflation or deflation? Right? Because in 1930s, the deflation actually eventually led to what we known as the Great Depression. Right? So it's not the best thing, So inflation is not that bad, right? Inflation is not that bad. So right now, why the economy, the market is so fearful for inflation, I honestly don't know why. Okay, I honestly don't know why. Okay, next one. Okay, so this is the steel one. They give more example on the steel one. So eventually, right, I asked him, can you give me a summary of all the 6 scenarios that happened? So he said, yes, tariffs often raise prices for the targeted goods, but rarely drives economy-wide inflation because there are other things like, loose monetary policy, supply shock, yada, yada, yada. Okay, and one more thing is this. Companies may absorb tariff costs, although they get lower profits rather than just passing it to consumers. Because they all know that consumers are very savvy as well, right? If all the time the consumers are being passed down the cost, what will consumer do? You will just not visit that business, right? So there is still competition, just like what Ethan said earlier on. The banks are fighting each other for lower interest rates. Retailers are also fighting each other for lower prices. So it's not all the time that they will pass down the cost to the consumer. Okay. Now, DeepSeek, I think is not good enough. So I decided to ask another AI engine. Okay, so guys, other than DeepSeek, which one was the one of the latest AI engine that you know? Which is the next one? Also come from China one. Do you know? Do you know that actually 2 AI engine came from China suddenly? Okay, not suddenly, but suddenly come into the attention of in the world. Yes, it's Q1. Okay. So I went to ask Q1. Q1 is by Alibaba, by the way. Okay. So I asked him, they said, yes, we can analyze the past incident. Okay. So long story short, I just give you conclusion. Once again, they said about the same thing. They will cause prices increase on import goods, short-term inflationary pressures, but they do not consistently lead to sustained inflation. Okay. So guys, frankly, am I an inflation expert? I am not. But one thing I can tell you is that I trust data. And based on the past history, when they increase tariff in other countries, okay, generally, one thing that came out very strongly is this. If it's a developed nation that increase tariff, yes. Sorry, no, you won't see much inflation. But if it's a developing nation, for example, that time when Venezuela did it, Argentina did it, wow, they got inflated like crazy. Why? Because they are not a developed economy. Plus, US got one more thing. What is the most powerful thing economically about the US? What is the most powerful thing about the US? Yes, Kelvin is absolutely right. Okay, USD. Why is USD so powerful? It's not just because it's USD. It is the reserve currency. That means when they raise tariff, they don't really have to suffer for it because the whole world has to use USD. Okay, so this is a bit more complicated in the economic sense, but just remember, when you're reserve currency, you don't really suffer that kind of inflation because you can control it as a reserve currency. The demand for the reserve currency is worldwide. And when there's more demand, it controls the inflation of currency. Okay? All right. So all in all, I would say when I asked ChatGPT even, I got very similar answers, to be very frank. The important thing is this. Guys, whenever we try to understand the economy, when we're trying to understand whether inflation will happen, what's going to happen to tariff, just remember Albert Einstein said this before. He says that everything should be made as simple as possible, but not simpler. What is he saying? He's saying that everything should be as straightforward as you can. For example, in property, just like I mentioned, we observe that property generally go up about 3 to 4%. Last year, we got up by 4%, right? For private property. As simple as possible. Don't think too much about it. So every time you wait, It's another 4%. Okay? But it should not be simpler. That means what? You drop it down to, oh, tariff equals inflation. That is too simplistic already because we know that the global economy is much more complicated than that. Okay? In fact, when I pull out some of the data from the Economic Policy Institute, right, you can find this. Is that actually tariff started right well before COVID. And it actually didn't cause inflation. Can you see that over here, the little light blue line actually went up before COVID, but inflation actually came down pre-COVID. It only went up after COVID. Same for this, same for steel, right? Steel prices didn't have any significant increase only after COVID. So guys, can I ask you, from this, what can we tell that is a much larger driver towards inflation, towards prices? Right? It is not tariff. It is the so-called printing of money. They don't literally print money, but what they do is they do quantitative easing, right? And right now, we are not seeing quantitative easing at a very large scale. Just to let you know. Okay, so my personal view is this. I do not think that inflation, unless things were to change, based on data, I do not think inflation is going to cause widespread inflation. Okay, and you can find a lot of other papers I can go and read, right? Okay, and they basically say that, right? It is not generally. Okay, generally it is not. For example, a tariff in the US were never associated with rising prices. Wow, they use the word never. No, I don't even dare to do never. They use one. Okay, right? So, but while looking at all this information, right, the important thing is of course, guys, you can also find a lot of articles that supports tariff causing inflation. Okay, in short, you can find any data to fit your goal. To be very honest, all right. If you have an impression in mind, you just go and search for it enough in the internet, you will find something that supports it. Right. So, guys, as an investor here, yes, we can form some opinion of the economy and at large, right? But what is the best thing? Right? Or Donald Trump said, this is the best thing. What is the best thing that ever happened to you as an investor? What do we always emphasize? Those of you in Stock Market Genius, what is the most important thing that I always say you need to emphasize when you are investing? You don't need to know about the economy, You don't need. Right? Yes, build conviction, but let me go a bit deeper. This is exam question number 2. How do you build conviction? Conviction on what? What is that conviction? The conviction is on the quality of the business. Okay? I know this is very cliche, but it is the truth. Because, guys, think about it. There are 2 types of things in the world. One, you can control, right? I can. One is I cannot. Guys, the economy, how the tariff will happen, will it cause inflation and all this? Where does it fall under? Can or cannot control? As simple as that. Right? Type in the chat. What do you think? Right? Can you influence the inflation? Can you influence tariff? Answer is you can't. But one thing you can do is you can focus on great business. And guess what? Just nice as Donald Trump is doing all this action, giving the market a lot of volatility, it is an amazing week as investors because it is the earnings season again, right? And earnings season is hunting season, guys. Because right now, as we are in the midst of earnings season, already more than 60% of the company that announced beat expectations already. Is this good or bad for the stock market? Ask yourself this question. Okay, and this week we got a lot of heavy hitters, We got Palantir, we got NXP, right? We have AMD, we have PayPal, Spotify, Alphabet, ARM, Qualcomm, Amazon, Cloudflare, Roblox, Eli Lilly. This week is a banana week. So I'm going to be quite busy. Right? That's why I want to do the emergency live stream tonight. Okay. So guys, the important thing is this, once again, right? Okay. Although I spent a lot of time talking about interest rate, to be very frank, mostly it's got to do with property. But from the stock market front, right? Okay. I hope those of you who are in the stock market genius community and those of you who are also not in the community, right? Just remember one thing is this, focus on great businesses and build that conviction. Because if you can find great businesses from here and tonight the share price drop, instead of running in fear, you should be going out and hunting and collecting. Okay. And I can tell you this week, the volatility is never ending one. Why? Because this week we have a lot of announcements. Right? Tonight we're going to get the PMI reading that's coming out. On Friday, we got unemployment rate and we got non-farm payroll. The volatility this week is through the roof. Okay? Now, guys, can I ask you, volatility as an options investor, myself, okay, is it a good or bad thing? As an option investor, is it a good or bad thing? Right? Think carefully. For example, those of you who are at SMG, you know we like to sell puts, right? Or we like to sell call options, right? Higher volatility means what? Higher premium. And at the same time, Donald Trump is giving you lower prices. Tonight, we expect the market to nuke 1.6% already. Right? So I honestly don't know why, if you know how to invest, why should you be fearful? You should be fearful if there's only one thing. If you don't have enough money to buy. That's the only fear I have. Then go and look for Eaton. Okay, not okay. Okay. But the thing is this, if you know what to buy, you focus on a good business, you have conviction already. Now the premium is higher for you to sell puts on good company, plus you get lower prices. Oh my goodness, what can you ask? What more can you ask for? You should be calling Donald Trump, say, and thank you. Thanks, sir. Right? Okay. Now, one more thing is this. Of course, right now, a lot of people are calling for the very, very horrible word. What's the R word? Everybody, recession, right? Okay. Now, I am not generally a pessimistic person. So generally, I don't believe in recession until I see it. But of course, when you see, it's a bit too late. Okay. But I can tell you, the bulls, right? The bears has been calling recession for the last 3 years, ever since COVID finished, right? 2021 until now, right? They have been calling recession, and they have been wrong every single year. Now, of course, guys, can we avoid recession totally? Of course not. Eventually, we will have recession. But the question is, when? Okay? So there are many indicators to look at. I just give you some broad indicators first. Number one, okay? So this is the S&P 500 forward earnings yearly change on a monthly basis. So January compare January, Feb compare Feb. Okay? And you can see there are gray out areas. These are basically the previously we have economic crisis, right? So this is the dot-com bust in 2000. This is 2008. This is the 1993. This is the 1980 something. And can you see that each time when we enter into a recession, right, the forward earnings year-on-year change is always negative. Negative. Right? Even COVID, it was negative. Where are we now? Guys, can you tell me our earnings year-on-year change for S&P 500 higher or lower? Can you all see over here? Oh, you are shocked. You're like, hey, what is this? Hey guys, like I say, in God we trust, the others bring data. So I bring your data. Because I'm not God, Look at this very carefully. Ask yourself. Every time in the past when there's a recession, earnings growth is negative. Where are we now? We are not near at all. We are at about 10%. Are we close to recession? Does this look like a recession to you? Honestly, I cannot say for 100% it won't have a recession, right? Nothing is 100%, but I can say that high chance we are not going to see a recession yet. Okay? Yet. The answer is yet, right? Another thing I show you, do you know about this thing called the January barometer? Those of you who have heard of it, type in yes. Those of you who have never heard of it, type in no. Okay? Basically, the barometer says this, if the January market does well, that means January as a month, if you are at a positive, right, the year will end well. It will end at a positive. Okay, so this is the track record in the past. This is going back to 1951. Every single year where they had a January year-to-date return that is positive, right? Okay, the calendar year, all right, the majority end in the positive. There are, of course, some outliers. They are like 1 year here, 1994. This is .com, 2001, and this is 2018. Otherwise, you have a crazy percentage of win. Okay? And so even if you count the final 11 months, right, you have a 85% chance of the market ending higher. So once again, I'm not saying this is like some voodoo magic, but it's just the statistics. And I like to study statistics because we always say what? May odds be on your side. Right? I like the odds here. I like the odds here. Okay? Right? Now, then when we look at this one, January barometer, when we look at, okay, if it's a positive January, okay, what is the percentage that you will end off higher? It's 86%. 86%, you know. And on average, the year will end up higher by 12% if all things stays equal. Okay? Right? So this is, to me, is quite encouraging. Now, another thing I want to show you is this. Right now, with the market like roaring and whatever, right? Let me ask you, okay, what do you think is the market sentiment? Now, those of you in Stock Market Genius, you know that I'm a very big sentiment trader, right? That means if the market is very hot, I want to be bearish. If the market is very bearish, I want to be very hot. Okay? I want to do the opposite of the herd. Okay, so guys, let me ask you right now, okay, are we bearish or are we bullish or are we normal? Type in the chat. The market is feeling bearish, that means they're very fearful, or they're very bullish, that means they're very greedy, or somewhere in the middle. Okay, so where do you think we are right now? So a lot of people say bearish, bearish, bearish. Okay. Now the thing is this, once again, don't rely on your instinct here. Okay? Right? Hey, how many of you after I say this, you go and check the sentiment indicator? No, right? You just type in the chat, right? Okay. So guys, come on, must learn. Okay. So if you go to the CNN fear and greed indicator, right? Okay, the fear and greed index, right now we are at neutral. We are at about 46%. But frankly, from a week ago, we were actually fearful, you know. 1 week ago, 1 month ago, we were at extreme fear. This is why I do not think that we are at the precipice of a recession. Because whenever we are close to a recession, we always see what? A lot of greed. Recession tends to happen when everyone is bored already. Everyone is like, yes, this market is going to go on forever, right? During the dot-com bust, if you remember. Everyone's like, wow, technology, IT is the best thing ever. Everybody just buying all the dot-com companies, right? With or without earnings. When this kind of greed happen, then yes, I want to be bearish. But right now, it's kind of like, it is not. Okay. Another one, this is the AAII indicator. You can see that, yes, while the bullishness is quite high at about 40+%, but the fear is also increasing. So there are a lot of people who are like, hey, I think now the market is very, very hot. Let's just take a pause, right? And that's why, to me, right now, I'm not so afraid of a recession. If anything, I want to thank Donald Trump. Thank you very much for the goodies. I want to thank Jerome Powell for fighting Donald Trump, giving me all the goodies. And I want to thank China as well, because China gave us the AI war. This AI war single-handedly caused the largest drop in NASDAQ since, I think, like 10 or 12 years. It was crazy. Okay? Now, guys, I show you a chart here. This is one of the stock that we mentioned in the Stock Market Genius. So those of you who are in SMG, you'll find this very familiar. Now, guys, let me ask you, if your share price was 136, it fell all the way to $100. 136, dropped to 100, that means a 30% drop. Hey, guys, how will you feel? Guys, how will you feel? Type in the chat, how will you feel? Ian, very honest, you say freak out. Okay, Vanessa and Qingling, you are the community, so you'll buy more. Okay, right? People say cry. Exactly. So this is what I was saying earlier on. Focus on good business, because if you know that it's a good business, you have the C word, the conviction. Then when the market is selling you something on the cheap, you should be buying more. Okay, this is a very easy thing to say, but what is the most problematic for most people is that they don't know whether is it a good business. Because most of the time when they buy shares, how do people buy shares? What trigger people to buy shares or buy a certain company? Hearsay. Listen to people, right? I can tell you, humans are very interesting. We will spend hours and hours reading our iPhone and trying to understand, is the iPhone better than the Android phone? But when we buy shares, right, we just throw in $5,000, $10,000, right, on a news, on a friend telling us. It is crazy. I don't understand why. Because maybe they don't have to swipe their credit card, right? So maybe we should get everybody to swipe credit card when you buy a share. Maybe that will prompt people to think twice, right? So when the crash happened, how do you feel? You should be asking yourself, firstly, is it a good business? Because if it's a great business, then such a decline is a gift for the bold. That means those who are brave. But really, I don't really like this statement. Because to be very honest, right? Hey guys, do you think I'm a very brave investor? Let me ask you. I want to be very honest. Okay, Ethan know me very well. I'm a scaredy cat, you know. I every time I invest, right, I look out for one thing. It starts with S. What's the S when I invest? Safety. Right? Because if I can take care of the downside, the upside will take care of itself. So how do I get safety here? Is that I must be damn sure. Never 100%, but I want to be damn sure, 80%, 90% sure that this is a great business. So I show you the fundamentals of the previous chart business that I just showed you. This is their fundamentals. Okay? So you can find this on any of the website, Yahoo Finance or Stock Investor. Okay, so I go through with you. Revenue 5 years ago was at 2.4 billion. Right now is at 6.6 billion. Almost every year growth is double digit. Net income growth, even more crazy. High double digits. Okay? And this company is doing a gross margin of 64%, 42%, and even after you minus all the expenses, every $100, they make 40% net profit straight into the pocket. And the company previously was at $136 and it fell to $100. $100. $36 evaporated from their business. So guys, can I ask you, how do you feel about this business? Are you still feeling fear or now you're feeling greedy? Okay, guys, type in the chat. Okay, because when you know that there's safety, you will be greedy. Okay, now what is this company? Any of my SMG people know? Qinling got it. Okay, so the company, too excited. I drink water until I choke. Okay, it is ANET. Okay, what is ANET's full name? It is Arista Networks. Okay, and in fact, we talk about this when a crash happened, right? I tell the community, hey guys, this is what I'm doing. Now, guys, in the community, I will never tell you, hey, please follow Pete, please buy this. No, but I want to be 100% transparent. I want you to stand behind my shoulders and look at what I'm doing, right? And what we did was we sell put and buy call option. This is known as a synthetic trade, okay? Right? So this is a double bullish trade, by the way, all right? So we did that on a strike price of 110, okay? And on this trade, right, how much money did we fork out to establish this trade? Actually, very little. Because when you sell put, I collected $12.80 and I buy the call at $13.60. So effectively, I fork out 80 cents, right? Which in reality is what? Is $80. Okay, so you plus 20, it is $80. Right? Straightforward trade. I promised to buy Arista Network shares at $110. I won the upside, so I buy a call option at 110. Okay? And this is the results. And this is not even the latest. Okay. I think after the nuke, this will go down. Right? But tonight, I think maybe can establish some more. Okay, but let's see. Let's see how much Arista Network will drop. Okay. So overall, guys, this is the important thing that I want to show you all, is that when you invest, when you focus on great businesses, you have the conviction. Then when the crash happened, now this is which crash? This is not Donald Trump. This is not interest rate. This is the AI crash. Right? Now, to be very frank, the most common AI crash trade a lot of people do is NVIDIA. But frankly, I find that a bit more dangerous. Why? Because NVIDIA has more to lose, right? If, let's say, another chip company really come out with better chips, right, they will lose. But Arista Network doesn't really lose. Why? Because they don't really care whether you're AMD, whether you're NVIDIA or you're Dell. So long you need to set up a data center, I will help you set up. That's it. Right? This is what we call the pick and shovel business. I love it. Right? And in fact, this trade, when we establish it concurrently with NVIDIA, actually performed better than NVIDIA. Now, to be very honest, I didn't establish it for NVIDIA for myself, right? But I knew it from a student. Okay. So this is a student who say, hey, I started investing in the stock market, redabble. I don't know what that redabble mean. Okay. In the market, he said, I stopped because really no time, no energy. Right. So hopefully no need to do so much homework and monitoring. Okay. So I said, yeah, the DeepSeek was a great opportunity, right? He said, yeah, NVIDIA is taking a bit of time to shake it off, but ANET is looking good. That's when I found out that, actually, when I go and compare, so if you look here, right? Okay. So if you look at ANET, right? Let's look at daily, okay, right? So this is 29, and now we are much higher already. Oh, tonight is back to 110. Can you see? Hey guys, can you see not? ANET back to 110. Wow. Tempting, tempting. Okay, all right. Okay, so this Arista network already recovered quite strongly already. How much is this? From here to here, recovered by 18% already. Okay, but if you look at Nvidia, right? Wow, Nvidia, what happened? Never go anywhere. Nvidia recovered by 9%. Another thing that I want to share with you guys is that very, very often when there's a major event happen, I don't like to go for the most obvious trade. Because whatever is the most obvious generally has lower returns. That's the truth. Because all the big banks will go in and play on your arbitrage away, right? That's why I spend a bit more time, I dig a bit more business, right? And I hope that all of you here will also treat investing as such. Although my dear friend here say that he joined SMG because he don't have much time to do homework monitoring, but really, it is not that much work. To be very honest, those of you in stock market genius, can you share with them? Does it take a lot of work to invest, or like really a lot of work? Not really, right? You can just do a very, very simple trade. Just do a buy call, right? Yeah, like what Tini said. Not really. You can just do a simple buy call. You can just do a cover call, whatever you want to do. The important thing is this: once you build that conviction, right, that is basically all the homework done for you upfront, right? Okay, so over here, I want to say again, Arista Network is what we did in Stock Market Genius. I'm just taking this to share the community, the broader community, because I know a lot of you who are not in SMG, you are probably like, crapping your pants when the whole crash happened. And I want to just give you a bit of assurance, right? If you are investing, if you know what you're doing, you focus on a good business, you build that conviction, okay, it will be great. Any questions on Arista Networks? By the way, just want to say again, this is not investment advice. I'm not telling you to buy Arista Networks tonight. If you don't understand what is Arista Networks, very simple. Just go to their website and study. Just understand the whole company very quickly. Doesn't take you more than 1 hour. Okay? All right. Okay, Eve is asking, should I hold on to MSFT, which is Microsoft? Okay, so let's take a look at Microsoft very quickly. Pre-market haven't come out yet. Okay. Oh, it's up already. 410. Okay. Okay, so guys, can you tell me what is Microsoft doing now? Actually, Microsoft did recover from the DeepSeek one very well, no? Also about 9%. So you can see all the very obvious trade. But okay, not too bad. Okay, right? But what is it doing? It's kind of like going sideways, not moving much, right? It's just going sideways. Okay, so I would say MSFT overall is a strong company, but it has one problem, one potential problem. What is the potential problem about the AI situation that makes Microsoft a bit dangerous? Is that it has quite a significant stake on OpenAI. Exactly. Right. So that part might drag down its performance a little bit. Okay. All right. Okay. So Clara asked then, why does gold shot up so much in the last few days? Oh, very simple, guys. Gold prices is a factor of fear. Okay. The higher the fear, the higher the gold prices. All right. That's about it. If you want to buy some gold, I think it's not a bad idea. I personally don't. To be very honest, I personally don't. But it doesn't stop you from doing anything. But if you look at just, for example, S&P 500, right? Okay, gold went up by 37%. But if you stack on S&P 500, okay, right, it does seem like the gold outperformed S&P 500 in a 1 year basis. But if I zoom out, I go to the 5 year basis, right? Wow, actually, it gold did pretty well also. But can you see that in the longer term basis, the S&P 500 tends to outperform gold, right? And for one very simple reason is that because S&P 500 is productive, they produce earnings. Whereas what does gold produce? Nothing. Okay, right? So to me is I don't really buy gold. To me, my goal, my GLD, my GOLD is what? Those of you at SMG, what is my gold equivalent that I like to buy? Yes, very good. BK got it. Yes, it's Bitcoin, right? To me, BTC functions as a goal to me. Although, to be very frank, it does have a much more crazy volatility compared to gold. Okay, right? But I do see in the long term BTC as a more of a gold asset. Okay, all right. Okay, Celine asks, Pete, can you explain what is pre-market? Pre-market basically is telling you what is the price that the market will open on. So right now you can see that pre-market, everything is down. S&P is down 1.5%, right? QQ is down 1.6%. Shopping time, hunting time. Okay, but the important thing is must have that conviction. You must focus on the great business. Okay? All right. Okay, so for now, yeah, that's the main thing I wanted to share. Okay, so type in the chat. Why do you think when the whole AI situation happened, the whole market collapsed? Why? I can tell you, the market is on one mode. What is that one mode? The mode is this: is sell first, think later. When they sense fear, right, they sell first and think later. Now, a lot of people ask me, Pete, the institutional banks, the major investor, when they sell, right, they must have thought through it already. Guys, I work with the institutional bankers, and I would just like to say that we are not gods. There is no way the institutional bankers, right, my counterparts on the other side, is able to make a snap judgment and say this is definitely 100% bad for all the tech companies. What they did was, if I let my portfolio drop by 2%, my investors is going to kill me. So what they did was they sell first, think later. Right? They sell first, talk later. Right? So when that happened, the question is, hey, guys, what is happening to the AI situation? Now, the DeepSeek, right, is going to make AI cheaper, correct? Okay? Then they're saying that, hey, maybe the requirement for chip will drop, right? But one thing is this, hey guys, can I ask you, long time ago, those of you who are older than me or my age, you will know this. Long time ago, when computer was very expensive, we could only access computer from where? From our school libraries, from internet cafes where they can buy computers or even office, right? Home computer back in the days, back before 1990s, was almost non-existent one. Nobody owned computer at home. Why? Yes, absolutely right? It is expensive. But once it became cheaper, the development of computers stopped there? No. It basically lowered the barrier of entry and everyone start buying computer. No longer just the library, the internet cafe, but every household. Okay? And this is what is known as the Javos paradox. Okay, I think I'm murdering the name, but okay. But why is it a paradox? Because they say when the cost drop by half, right? Okay, when the technology improvement double the work with the given amount of energy, right? They thought that, hey, maybe we will do less work. But no, right? The quantity demand more than doubles. Right? So, and another example is this. Back then when car first started, right? The fuel efficiency is very, very low. But as the engines get better and better, the fuel efficiency increase, right? But as it become more efficient, did it drop the overall fuel usage or not? No. Because like what this person is saying, these new cars are so efficient, everyone is driving everywhere these days. Okay? And this is what is happening, in my opinion, and this is what will happen to AI. Right? Another example, flying, aviation. Flying used to be so expensive, right? But as it got cheaper and cheaper and cheaper, guess what? More and more and more passengers, right? We burn even more fuel. Even though the airplane become more fuel efficient, we ended up burning even more fuel. Why? Because more people want to travel, right? So I honestly don't know what is happening out there. I do believe the adoption rate, right, will be like computer. Honestly, I don't even know why is it called the Javos paradox. Because to me, this is freaking common sense, right? Hey guys, do you all agree or not? Do you all agree actually this is freaking common sense? Because if something gets cheaper, more people are gonna use it. Therefore, more usage. That's it. What is so difficult to understand? I don't get it. Right? So I am very certain, I wouldn't say 100%, but I'm very certain this AI crash, right, is a very, very big misjudgment on the banker side, to be very honest. Right? If anything, I think Nvidia, if they are still the best chip maker out there, right, is gonna go nuts. Think about it, guys. Now, right now, who is able to run a large language model like a AI machine? Who can do it? Only your big companies lah. Only your Meta or whatever, right? But if the cost of running a AI machine get cut by so much, they say that OpenAI did like what 500 million, and DeepSeek took what 5 million. Got cut by 100 times, you know. What do you think is going to happen? Normal businesses are going to start running AI. They will run their own AI, right? So, okay, so this is my view. So this might be the most important part. Once again, I want to emphasize like crazy, this is not investment advice. Okay. So number one, we talk about tariff. So I am not 100% certain that tariffs will cause inflation. Let's just be very clear about it. In fact, I don't even think it will cause, but let's just see. Okay. But one thing I know for sure is this. This gentleman over here, I am 100% certain he wants a booming economy. Okay? That's what I'm certain. I don't know whether tariff will cause inflation, but I know Donald Trump well enough. Hey, he's not my friend, okay, but I think I know him well enough. Okay. I think he will fire Powell very soon. If Powell does not cut rate by much. Right now, he's telling Powell, I give you a second chance. Let's see. Let's see if it happens. Okay? Right? So to me is this. With tariff, I think the US definitely want to lower interest rate. And that's what Donald Trump wants. He already said it. Right? The moment Powell said he's not cutting, Donald Trump went on Truth Social and Twitter to shoot him. Okay? So let's see how it plays out. But let's scenario play. So guys, whenever you're investing, right, think about up and down. What if the interest rate remain high? How? Is it bad for the economy or not? Right? I actually think it's good, you know. Because just like the property buyers earlier on that I said, finally they got clarity on what they can do, right? I think businesses will also love it because finally the businesses will have that stability that they so desire. Right? To be very honest, the businesses don't really care whether interest rate is 4% or 2%. They just want to know whether it will be 2% for the next 5 years or will it be 4% for the next 5 years so that they can plan accordingly. All right. So I think so long there is stability, even if the rates remains high, I think economy can still continue. So long it doesn't keep seesawing, right? Don't this year 4%, next year 2%, next year 5%. Wow, then the business will go crazy. Okay. All right. Now, so what is the trump card here? Okay. All right. Pun fully intended. What's the trump card here? Number one, I think semicon is going to continue to do well. Now, for those of you who have no time to study businesses, right, and you're not quite sure which business to look at, number one, your option is number one, you can join SMG. Okay. Okay. Promotion. Number two, just look at index level ETF. For example, semicon also has a semicon index. SOXX and SMH, these are one of the major semicon ETF that you can look at. Okay? Very simple to understand. You're just buying a basket of companies, right? Second, look at the supporting actors of all these semiconductors, right? So I mentioned Arista Networks already. For example, there's still Broadcom, Qualcomm, and Dell. Okay? Next one, the AI makers. I do believe they are going to be even stronger from here because now they managed to achieve the current level of AI with OpenAI, right? With let's say 500 million. But actually, the cost is only 5 million. So now they have 495 million. I think the level of AI they will go to, right, will be shooting through the roof. So they can save money. At the same time, they can scale their AI even higher. Right? So that's where it's kind of scary, right? I don't know what this company going to do with the AI. Hopefully not to spy on us, but but I think sometimes, right, if you can't fight them, you join them, right? So of course these are going to be strong investment, but just take note, this bugger Microsoft has a lot of investment on OpenAI, and if OpenAI doesn't manage to deliver, then that can be a problem. Okay, the rest they don't care. They are not tied to the hip with OpenAI. They can go to any AI engine. In fact, they create their own large language model. Okay. Now, okay, so this is meant for a joke. I will do all this, but I just won't buy OpenAI. Okay, by the way, you cannot buy OpenAI, it's not listed. Okay, so this is the main, most obvious play. Okay, but what is the not so obvious play? What is the less obvious play? Which sector do you think will benefit other than the semicons and the AI makers? Can you type that in the chat right now? Let's see if our view aligns. Let's see our view aligns. Okay. John says security. Kelvin says IT, energy. How come suddenly everybody say energy? What's up with energy? Okay. Okay. So over here, my first sector is banks. I do believe banks is going to benefit a lot more because of the tariff. Okay, so hear me out. It may be a bit more, how to say, the linkage is a bit more distant, but see if it makes sense to you. When Donald Trump implement tariff, right, it tax people, the companies that used to invest overseas will now come back to domestic, local investment. And when they come back to local, they want to bring the manufacturing back to local. They will build factories and whatnot, right? They will build their facilities, right? Then how do they pay for all this? They need to go to Eton. Just kidding, but they need to go and borrow money, basically, okay? Right? So I do believe there's going to be more domestic borrowing within the United States. A very simpler way to think about it, but I don't think I'm making it too simple. Right? Like what Albert Einstein say, as simple as possible, but not any simpler. This is one. Another one is yes. Hey, Geraldine. Okay, let me see here. Who say energy? Alvin. Wow. Vincent, Alan, Tim, Alvin, Irene, Xin Geraldine, Valerie. Hey, y'all saw my slides, Cannot be right. Okay, so yes, to me, the oil producers, I think, is likely going to do quite well also. Okay, so why is that the case? Because right now, a huge majority of the oil come from where? And now, guys, I know I'm stretching this live stream quite a fair bit, but this is very, very important, okay? And I apologize. One thing, I apologize very quickly. I know my Zoom capacity is 300. So there are a lot of people who couldn't get in. Okay, so I do apologize. Okay, so why is it important? A lot of them come from Canada. Yes. And right now, Canada oil tax has how many percent? 10%. So those companies with quite a big share of domestic oil production, I think are going to do pretty well because now they can sell their oil a bit higher. Okay. So this is my theory now. This is my theory. Okay, whether it will pan out or not, let's just remain to be seen now. But these are some examples here, like ExxonMobil, Chevron, ConocoPhillips, and EOG. Okay. Now, however, if you look at the energy sector as a whole, for example, Exxon over here, it has been meh, like sideways. Chevron also meh. Okay. ConocoPhillips, wow, worse than meh. This is like in trouble, right? Okay. EOG also meh. Okay, you can do sell puts for all these for those of you who do sell put, then this will be great to sell put, right? Okay. Um, but what if I tell you, right? So this is the SMG stock and spotlight research. Okay, those of you at SMG, you know already. Don't spoil the answer. Okay, what if there is an oil and gas company out there, right? But the trend looks different. Looks like that one. Guys, do you think it's possible? Oil and gas company, but the trend is like that one. Okay. All right. Now, why is this so-called going uptrend? Is this I show you okay? Hey, oh yeah, answer come on, right? Okay, so this is the answer. The answer is this: they are not the oil and gas producer, but what do? They own the land, and they own one of the most not say lucrative, the most reserve area with the most oil reserve in the whole US. It's called the Permian Basin. You can go and Google it. Okay, they have one of the largest footprint, okay, in the whole Permian Basin area. That means if you want to dig to drill oil, for example, if let's say Shell, like what James saying, Shell or Exxon want to come and dig, right? You have to pay them money. Okay, so it's kind of like a slightly different oil and gas producer. All right, and what is this company? Okay, so I don't want to hold you up for too long tonight. Okay, I give you all the answers straight away. Okay, 1, 2, 3, and the answer is TPL. Have you heard of TPL before? Hey, how many of you heard of TPL before? Texas Pacific Land Corporation. Those who heard before, type in yes. Those who never heard before, type in no. Those in SMG one, of course, you heard before lah. I talk about this so many times already. Okay. Okay. So all those of you who don't know, right? This is they are the landowner. They are the largest landlord. So you see, I managed to bring this back to property, Okay. They are one of the largest landlord in the US where underneath them, there's oil. You know, there's this saying, right? They always say, wow, only in my backyard has oil. They literally can say that, right? And this share price, although there's a bit of volatility recently, but overall in the 5-year trend, it is pretty solid, pretty up. Okay. And I talked about it earlier on, and we say, hey, when it dropped by this portion, where it dropped from like 1.7 all the way to 1.1 something, I say, guys, wow, hey, I don't know why it dropped. It wasn't Donald Trump, it wasn't everything, because this happened much earlier on. But guys, when a good company share price drop, right? Okay, just go and research a little bit, make sure there's nothing big. Then what should you do? If you know there's a good company and know that nothing big has happened, right? Then all you need to do is to take action, right? Okay, take action, right? Okay, Kelvin say DCA. Okay, I think this one will offend people, but I generally don't like to DCA when I have conviction. Because, hey, I don't know who, okay, I believe in God, but God give you the opportunity right now, and you still tell God, hey, sir, I DCA, I buy 2% first. Wow, that's crazy, man. You have done so much homework. You have the conviction. Okay, when the opportunity comes, you need to strike. Right? It's just like what Warren Buffett say. Warren Buffett say, investing like baseball. You don't have to swing the bat every time. But when the ball comes to you, super easy to hit, you better whack it out of the stadium, man. Right? And this is what we did. Okay, so we bought in around 1106. Okay, right now, not too bad, 17%. And this is just shares, I haven't talked about options yet. Right? So I just want to share with you guys one of my main sector going into Donald Trump or his tariff, right, is energy. Because all this production is going to shift back to the US. And guess what? The landlord is going to do very, very well. Okay? All right. Okay, so that's all I wanted to share with all of you. Right now, what we'll do is let's transit into Q&A. Okay. Hey, but guys, as a whole, right, can I ask everybody, do you all learn something useful today? Yes or no? I hope you all learn something useful. Otherwise, you all spend 1.5 hours with me for nothing. Okay. All right. Fantastic. Okay. Okay. John. Okay. Wait. John asked me, can you share the link again? Wait. Give me a second. Okay. What link is it? Or SMG link? Wait. Okay. It's here. Wait. Okay. I will share the SMG link now. Any questions? Type in the chat. Okay. Okay. I think there was a question about NVO. IMDK is asking, why has NVO dropped so much? Okay. So let me show you. Okay, by the way, the market just opened. So let's have a look first. Very quickly, S&P is down 1.4, QQ is down 1.6. It actually is a lot better already, because the pre-market was down like 2%. So actually recovered already. Recovered already. Okay. So let's look at it. If you look at the S&P pre-market, right? Yeah, it actually recovered a little bit. A little bit. Yeah. Okay, so guys, can you see? The lowest was around here, the futures part. Now we are actually not bad. So you see, guys, opportunity. Okay, so while Q&A, you want to go shopping, go shopping. Why the NVO drop so much? Very simple. They did their drug, right? And very funny one. The drug wanted to achieve. Okay, so guys, let me ask you. When you want to lose weight, right? Okay, so by the way, NVO is famous for the Ozempic drug. Okay, they help you lose weight. So guys, when you want to lose weight, right? When you want to lose weight, how much weight do you want to lose? So they wanted to go for 28%. Okay, but they achieved, I think, 24%. Yeah, so when this happened, then the share price. So I honestly think it's very silly when it dropped. But overall, I think the company is great. It's a great business. Cash flow positive, earning positive. Yeah. Okay. For those of you who are in the SMG community, right? Okay. Let me just go there first. Okay. I show you the platform, then you all can go and take a look, right? Okay. Okay, let me just zoom in first. Okay, can you all see? Can, right? Okay, so this is the SMG platform. Now, when you are here, right, if you have any questions or anything, right, just go to the community chat here. Okay. Once you're at the community chat, it is like a forum. So many of you have been asking great questions, and I always do my best within 1 or 2 days, I'll answer your question over there. Right. So if you have any questions about if you are new to investing, right, just come here and ask. Okay. Wow, already got 5 more questions already. Okay, later I'll answer the question. Okay, so you can come in and ask the question here. Now, let me just run through the platform very quickly so that I want to make sure that you guys understand how to use SMG. Okay. So number one, if you are very new to investing, you need things like, your brokerage, how to set up technical analysis in the chart, like trading view chart, right? These are your best help. These are the videos. Okay. All right. The starting guide is here. You can watch this as well. Please watch this. Okay. Now, for most of you, if you want to look at the tracker where I talk about the TPL, right, Texas Pacific Land Corp, all these, right, or Arista Network, right, it will be in this tracker. Okay, you can click on this, then it will bring you to the tracker. All right. Um, then following, these are all the recordings of all the live stream or any videos that I've done to explain each of the trade. They will all be here, right? This is the 2025 one. The 2024 one is all the way at the bottom, right? Because I archive it already. Now, once you scroll down, this is the stock on spotlight, right? So this is where I talk about the business previously. I talk about TPL is in here. Okay. So you can see it's from July, August, September, October, November, January. Right. So the February one is coming up. I'm still doing a research. I'm still deciding between one of the three. I'm still deciding like which one to share with you. Okay. But yeah, right. You can find the idea here. One of them is TPL. Okay. Now, for those of you who need even more, let's say you're very new to investing, you have no idea what is option, be it, I'm just totally new, right? The online course is in the middle. This is where you can go through every single video, right? I guarantee you, after you go through every single video, right, you will know how to roughly invest with options, right? This is to get you started, right? So, for example, what is stock market, how to open a brokerage, what are options, what are the option strategy we use here. These are bullish strategy, these are bearish strategy, okay? Then further down, there are other things like portfolio management, how do you grow your portfolio, or how do you set up an income portfolio, so on and so forth, okay? Then, of course, at the end, you will find the 2024 updates and trades over here. All right. Okay. So this is how you can use the platform. Then whenever I got new trade ideas, I'll put it here. Right. You will see a new one come up. I will send it to the Telegram. Okay. And you will also receive an email from me. Now, those of you in the community, right, very importantly, please do not opt out from the marketing email. I guarantee you, I will not send you marketing email, but the email is to tell you that I upload a new video, okay? So some of you say, AP, I never receive email, is because you opt out. Okay, so please go and opt in again. Go to your profile here, then you can opt in again. All right. Okay. Let's see. Okay, GH says, can you send us immediate update once you have done the trade? Okay, so the thing is this. When I've done the trade, I will update the spreadsheet. But actually, right, the style that I invest, right, is just like what my community member said earlier on, is that it is not meant to be like too immediate. It is not like, wow, you enter tonight, then tomorrow morning exit, right? It's not meant to be. For example, right, when we look at, for example, the TPL trade, right? Okay, let me just show you. Okay. Because the thing is this, if it's a trade that is so hard to follow, right? Wow, I must follow at the dot one, then it's very tough, right? Okay, so for example, right, when we enter the trade here, right? To be very honest, does it matter you enter one day later or one day earlier? Not really, lah. Not really. Right? Overall, I'm still holding on to a trade. In fact, if anything, I want to add more to the trade. So that is the whole idea. Right? It is not to make it into a full-time job for you. It's a full-time job for me. Right? But I want you all to get the trade idea as soon as possible. But the actual trade number actually don't need to be so concerned. One. Right? For example, I'll tell you, okay, I buy a call option or I bought shares for TPL. Some people say, hey Pete, I want to know how many shares you buy. Guys, can I ask you, knowing how many shares I buy, is it very important to you? Is it very important to you if I tell you I buy like 100 TPL shares or 10 TPL shares? No, right? It is up to your portfolio. You want to buy one or you want to buy 100, it is up to your capital size. Exactly, right? So don't be too obsessed to say, wow, I must know like every single dot. No, right? And the more important thing is understand why I do the trade. That is more important. Okay? All right. Let's see. So synthetic will require larger margin, especially during today's market. Yes, it's true. It's true. Right. So for those of you, in fact, let's see. Tonight we are saying it's a nuke, right? It's a nuclear event. But actually, when you look at the broader trend, right, is it such a big deal? Is it such a big deal? December was a bigger deal, right? Or not? So I don't know why people are so afraid. So if anything, this is a godsend moment. Wow, Donald Trump give you discount. He's a good president, right? Okay. Okay. I'm not political. I'm not political. Okay. I'm just here to take advantage of the situation. Okay. Okay, GH asked, will crypto continue to have a correction? Okay, Very good question. Those of you in SMG, you help me to answer. Do I invest in crypto or what do I invest in? Those of you in SMG, you will know one. And one thing I like to run a community is that after a while, right, I hope that y'all can think a bit like me. That's my objective, is to transplant this brain right to y'all. Okay? Yeah, I don't buy crypto one. Okay, guys, I do not buy crypto. What do? I only buy one major or maybe two lah. But it's like over 90% one. And that is Bitcoin. That's it. Okay. So if you ask me whether Solana will do well or some other meme coin, alternate coin, I cannot answer you. But for me, is I just accumulate Bitcoin like gold. So this one I dollar cost average because my conviction is that I think it's like gold, but I'm not having a conviction like, wow, this is Texas Pacific land where it's so valuable and then the price dropped 30%. It didn't happen. Bitcoin never dropped 30%. Okay. If anything, you look at Bitcoin, it went to 100 something, then now it dropped to 26. Actually, when you look at it, the trend is still up, right? Yeah. So this is actually what I meant by this is the type that I will DCA because it's not about conviction. It's my long term. I think this is good. That's all. Right. Like what Grace said, collection, but slowly. Yeah. Okay. Pinhu say MSTR. MSTR is like a leverage play of Bitcoin. Okay. So I won't go too deep into it tonight. I think it's too much already. But if you all want, those in SMG, you all will know my view on MSTR also. Okay. All right, okay. Any other question? Okay, William says, Hi Pete, I wasn't able to join the call earlier on. Yes, due to max capacity. Yes, I apologize. I pay Zoom a lot of money, but they only give me 300 packs per session. Okay, I will think of a way to find another provider that can give me like more seats. Okay, yeah. So tonight's live stream, I will upload it onto YouTube for everybody to watch later on. Yeah. Okay. Fantastic. All right. Any more questions? Okay, so without any questions, now it's 10:50 already. Everybody go and do your shopping, do your happy hunting. Then once that's done, please get your rest. Okay. Once again, I want to thank Ethan for joining me. All right, and for everybody for being here. All right. It's been a pleasure. It's been a great privilege. I want to add more value to all of you, and especially for those of you in the Stock Market Genius community. All right. So let me know if you have any questions in the community chat. I'm happy to answer you all there. Okay. Once again, a very happy Chinese New Year to everyone who celebrates it. 恭喜发财啊，what I don't have orange, but I got something orange here. Okay, what may your year like a dragon. Okay, so I'll see you all in the next live stream for the Stock Market Genius guys. It will be very soon. I think it will be like either this week or next week. If it's not live stream, it will be a recording. They'll upload. They'll inform you all. Okay, all right. See you guys. Bye bye.